Europe's largest low-cost airline reported a 34% fall in first-quarter profit, a rare setback for a carrier that has consistently outperformed the market. Chief Executive Michael O'Leary blamed consumer hesitancy, concerns over jet fuel shortages, economic uncertainty, and later booking patterns linked to the Middle East conflict. Higher, unhedged fuel costs also weighed heavily on earnings. Despite the weaker quarter, Ryanair maintained its passenger growth target, showing confidence that demand will remain resilient once the current disruption eases. The traditional opening ceremony at Farnborough International Airshow was cancelled following the appointment of UK's new Prime Minister, but that did little to slow the pace of business. Across the week, airlines, lessors, manufacturers and engine makers unveiled a series of major deals and outlined growing confidence in the industry's recovery. One of the biggest commercial announcements at the airshow came from SMBC Aviation Capital. The lessor reinforced its confidence in long-term aircraft demand by ordering another 100 Airbus A320neo family aircraft, 65 A321neos and 35 A320neos, and 100 Boeing 737 MAX aircraft, 67 737-10s and 47 737-8s. The orders underline the continued appetite from leading lessors to secure delivery positions despite ongoing supply chain constraints. Another major announcement came from BOC Aviation. The lessor placed its largest ever engine order with CFM International for up to 300 LEAP engines before confirming a further order for up to 220 Pratt & Whitney GTF engines. Taken together, the announcements demonstrate BOC Aviation's strategy of maintaining flexibility across both major narrow-body engine platforms while preparing for sustained fleet growth over the coming decade. Perhaps the biggest takeaway from Farnborough wasn't a single order, but the growing confidence that aircraft production is finally improving. Airbus said the supply chain is now in a much better position than it has been since the pandemic and outlined ambitious medium-term growth targets. Boeing echoed that optimism, forecasting the global commercial fleet will grow to around 50,000 aircraft by 2045, despite today's geopolitical uncertainty. Meanwhile, CFM International expects engine deliveries to rise by around 15% this year as Airbus and Boeing steadily increase production rates. After several years dominated by supply chain disruption, the industry's focus is gradually shifting back towards production ramp-up and aircraft deliveries. Away from Farnborough, Emirates made headlines after confirming it will refuse to accept the first batch of 10 Boeing 777X aircraft. President Sir Tim Clark said years of program delays and design changes mean the early-build aircraft would require too much modification to bring them up to the latest production standard. He also reiterated concerns over the program following structural issues uncovered during testing. The comments represent another setback for Boeing's flagship wide-body program, which is targeting certification later this year and first deliveries in 2027. Emirates remains by far the 777X's largest customer, with 270 aircraft on order. Finally, a look at the future of commercial aviation. JetZero secured a potential $3 billion financing package from the US Export-Import Bank to support construction of its planned manufacturing facility in North Carolina. At the same time, Gulf Air signed a letter of intent for the company's blended-wing aircraft, adding further momentum to one of the industry's most closely watched next-generation aircraft programs.